Hello everyone, and welcome back to another exciting online talk from the Oxford Guild with our Collegium Global Network and our partner societies from leading universities. Today, we are delighted to be hosting a special online event in association with StayTouch on the impact of COVID-19 on M&A, private equity, financial markets, and corporate strategies. This exciting masterclass will cover the financial, consulting, legal industries, amongst others. This invaluable panel discussion and Q&A will give you very useful advice, tips and key information on latest developments with senior speakers. We're delighted to be joined by Goel, the CEO of StayTouch, who will be moderating our esteemed panel, which is made up of Ms. Celine Mechain, partner at Goldman Sachs, Mr. Alberto Fumo, partner at Kearney, Mr. Jérôme Hervé, partner at BCG, Mr. Paul Lombard, partner at Willkie, Farr and Gallagher, and Mr. Sebastien Crepy, partner at Paul Hastings. Thank you very much again all for joining us today and for sharing your time. And over to you, the floor is yours. Gaurav, please take it away.
Thank you very much, Harry. It's a pleasure to have such an amazing panel in front of us with such a wide experience. And what is important for us all is to understand the impact of COVID-19 on our microeconomy, financial markets, and corporate strategies. So just a brief introduction about myself before we dive into the topic. I'm Goel, worked for 10 years in finance, 7 years at Goldman Sachs M&A, 3 years in private equity. Before my personal frustration related to the lack of smart networking tools led me to quit finance and launch in Los Angeles. I had 3 frustrations when I met someone either at a career forum or at a personal or a professional meeting. And those were mainly like either I was using those business cards, which I lost, or I was out of business cards. Second, either when I was adding somebody on social media, I was forgetting who did I add, when, and why. And third, mainly keeping track of all the notes of those meetings and contacts, scrolling pages. It was such a pain. And at the final point was also, it was all limited to one profile. As a result, I launched StayTouch. So StayTouch is a next generation contactless networking platform, especially meant for our times and post-COVID-19. With StayTouch, you can create multiple profiles, exchange contacts while bringing 2 phones close to one another, all under the data privacy and maintaining the social distancing. More importantly, with the help of unique profiles, you can also exchange contacts during our virtual conferences. The additional beauty of StayTouch is that when you add a contact using StayTouch or when you exchange using contacts using StayTouch digital handshake, it saves the date, time, and place. And it provides you that much needed memory to every contact and to every meeting automatically. More importantly, you can also add voice notes and pictures to the contacts or to the meetings, avoiding all hassles of typing or writing manual notes, therefore making it easier for you to remember the meeting. Given the current context, especially now with the focus on social distancing, safety, and data privacy, demand for contactless tech is definitely increasing. StayTouch provides you that ideal tool. You don't need to shake hands or exchange business cards in an unfamiliar environment. You can use digital handshake from StayTouch when it comes to meeting new people or exchanging contacts. Whether it is career forums or networking events, as most of our audience is aware about, StayTouch helps you remember the details that matter. That said about StayTouch, in the current environment, we all have been living the COVID lockdowns. We want to understand what has been the impact on the macroeconomy and the financial markets. So let me start this discussion and present our speakers. So kicking off with Celine Mechain, partner at Goldman Sachs. Would be very glad if Celine, if you can say a few words about yourself.
Sure, Gaurav, can you hear me properly?
Absolutely.
Okay, well, thanks for this introduction. So I'm Celine Mechain. I've been with Goldman 22 years. I'm a partner in our Paris office. I specifically am in charge of the private equity coverage and a few large corporates. It's a pleasure to obviously be there and represent the investment banking voice on this panel.
Thank you very much, Celine. We all are eagerly looking forward for it. Alberto Fumo, partner at Kearney. Dear Alberto.
Hello, Alberto Fumo. So I lead our private equity M&A practice in London. I mostly work with the leading private equity funds on buy side, sell side, and helping them on the portfolio side.
Thank you, Alberto. We have Mr. Jérôme Hervé, former partner at BCG. Jérôme, I think you're on mute.
To unmute. Yes, thank you. I'm a young alumnus. I've been a partner at BCG for 22 years, leading the private equity sectors in Paris, and now moving to a new part of my career and as an entrepreneur.
Thank you, Jérôme. Paul, partner at Willkie Farr.
Hi, so I've been with Willkie for about 10 years, and before that I was at ANO for about another 10 years, mostly doing leverage finance in all sorts of type of leverage financing, from unitranche to TLB to any sort of other mezzanine financing. And obviously over the past 20 years, I've also done my fair share of restructuring, which may come again soon.
Perfect. Thank you, Paul. You'll be providing us a lot of financing views, so it's very clear in the current market. Moving on to Sebastien Crepy, partner at Paul & Hastings.
Hi, everyone. I'm Sebastien. I'm based in Paris. I'm a partner at the Paul Hastings Paris office. So I'm mainly focused on private equity and M&A transaction. I mainly work for SMID, mid or upper private equity funds, or for M&A strategic, and used to work with Celine and Paul.
Thank you very much. Thank you all. Great to have such a panel, and of course our audience is now eager to get right into the topics. So let's get started. We are living in this very interesting times, and COVID has definitely shaken the world in last several months. We would like to start with you, Celine, perhaps on a more macroeconomic view of impact of COVID. How do you think COVID has impacted the microeconomy, and how do you see it going forward in both short to medium term?
Yes, thanks, Gaurav. Well, first of all, I think this pandemic has been completely unprecedented, and I think it continues actually to impact the macroeconomic world as we speak. So I don't think we've seen the end of what's happened since the beginning of the year. Having said that, I think this pandemic has brought a number of steps that are going to impact us going forward. I mean, the first one being liquidity, huge liquidity injected by the states, by the central banks to support our economy. And I think we were quite pleasantly surprised at Goldman about the reactivity of all the authorities to the magnitude of this pandemic. That has kept, obviously, the interest rates at very, very low levels, and has also participated in keeping the financing market in functioning properly. It was not obvious back in March that that would be the case, and during the COVID period, we managed to issue liquidity to all companies that were in need of liquidity, as well as supporting obviously people that were deeply impacted by what happened. So how does this translate in numbers? I think our macroeconomists expect, unfortunately, that 2020 will be a year of deep recession across the world. Our current prediction is that global GDP will decrease by 3.4% in 2020, with a rebound at 6.2% in 2021. Quite a severe recession by end of the year. Very severe in Europe, with GDP growth of around minus 8.9%, again with a rebound to 8.3% in 2021, and more severe impact in some of the Southern European countries, namely France, Spain, Italy, and obviously the UK. But as you can see from these numbers, we predict a V-shaped recovery. We've watched very carefully how China has rebounded after the lockdown of some of their largest impacted cities in February. And we see the same pattern in France. There's been a very big rebound in May of French consumer spending. The consumer confidence index is not back yet where it was pre-COVID, but it seems like it's a really event-driven crisis more than a structural crisis. So what does it mean for the business world? Well, when we look at the last three crises, for example, using M&A volumes, the last three crises, be it 1990 to 1991, 2001 to 2002, or the big crisis in 2008, it took basically 3 to 4 years for M&A volumes to be back to normal. We don't necessarily think that that's going to be the case this time, because there's been more liquidity injected in the system than ever previously. And I think event-driven crises actually have a faster recovery rate than structural crisis. So if I can leave our audience on a positive note, I would say hopefully, in 2021, we'll have a feeling of back to normal, both from a business and from a sanitary standpoint. Obviously, that only holds if there's no big second wave and if a vaccine is found relatively quickly to this virus. Let me pause there, Gaurav, and maybe check whether you have additional questions.
No, thanks, Celine, for this view, and absolutely, just because the key question was how do we how do we distinguish this crisis versus 2008, and which you partially answered that the structural change within the industry is not the same compared to 2008. So that's the key question. How do we compare the two crises?
Yeah, back in 2008, coming back to my example of volumes of M&A, we saw a decrease of about 52% of M&A volumes, and it's a good proxy for the activity in the business world. 52% compares with 65% in 01, 02 when we had the internet bubble, for example. So very similar type of correction. We are in July, and only 2 months after, or less than 2 months after decontainment in France, we see, for example, private equity funds back to deploying capital literally only a few weeks after decontainment, while actually the pandemic is not totally solved. We were discussing it with Paul before we started this webcast, and the level of activity for July is incredibly high right now, at least in the private equity community. I think that's a function of the dry powder that was raised by private equity funds before the crisis. I'd say that corporates probably come across as a little more conservative, but there's clearly a feeling that there's a window where you can actually transact at the moment. So I'm quite optimistic around the fact that being an event-driven crisis, we could be back to normal actually, or to at least resuming business relatively quickly.
Thank you, Celine. That definitely gives a lot of positive hopes across. Moving forward, so that's taking a bit of more commercial and concrete impact. Sorry, just Alberto, perhaps to you, how the COVID has impacted you and your clients?
Yeah, I would say that private equities in particular were probably considering to try to have a different approach to what they have done in 2008. And so I think the initial months were like, let's say, March and April were more focusing on the portfolio and trying to fix the asset that they had in the portfolio, making sure that they were secure. But as Celine was saying, then especially the biggest funds, the one with the biggest dry powder, they started to really look at potential opportunities to invest, and maybe not as traditional as as before, because a lot of the kind of main processes were stalled for the coronavirus. But actually thinking about more creatively on how to deploy capital in this new environment. And so, I mean, clearly you have read in the press some of the big transactions, for example, KKR with Coty and Bella. You know, I think, and I concur with what Celine was saying. I mean, I think we see a lot of activity now. There is probably still a mismatch between you know, kind of sell side and buy side valuation, because clearly you know, the coronavirus is a difficult can I say element to include into those evaluations. But no, I share the positive view. I mean, clearly there will be a few months to get back to normal, and 2021 will be the year where you will see strongest you know, flow of transaction. But everybody is already preparing for that. In terms of concretely how the work has changed, I mean, we definitely had to learn very fast how to work in this kind of intense and fast-paced transaction in a new remote world. And clearly, when you are assessing business for your client, or you have to, I don't know, for example, conduct a site visit via drones, which was something that we have never tried, but surprisingly actually was pretty effective. So you know, you need to change your approach. But as I said, it was because I think one of the key issues for us and our teams was really to make sure that actually everybody was what can I say, fully supported in this new environment. Because again, when you are potentially, you know, working by yourself in your home, and you are you know, spending a lot of hours on these potential deals, again, it's important that you know, you have all the support that you have from your team, that in other situation you will have in the office, in meeting together. At the same time, while here we have to find new ways to do that. But I have to say, I'm again touching wood, but I'm positive surprised on how we managed to handle this. And again, hopefully there are some learnings that we could use also in the post-COVID world, in terms of how we're going to manage more effectively our teams, our time, and our meetings.
Thank you very much, Alberto. So very great, good views on how the assets are still being valued for coming markets in either in late 2020 or early 2021. So I had like just two follow-up comments or questions on that, Alberto, perhaps. One, so you see there are still assets in the market in private equity, perhaps, which are still being traded in the market. So private equity market being live. And second, answering or asking you more about that work from home. Have you seen it really becoming a reality?
Yeah, so I think on the first topic, yes. So there are deals live, and maybe we will touch later on which sector are more active these days. But definitely everything that is you know, online related or healthcare related, consumer goods, but maybe focusing again on food, is something that is really getting traction from people. And again, areas where people see that there's been a small, we can say, curve down for this situation, but they expect a big ramp up again in few months. So people are trying to position, if you want, at a lower level or investment level that were not really possible a few months ago, and then hopefully try to get the benefit over the next few years with proper investments on those businesses. So, but clearly we can expand later in the conversation. I know Celine and Jérôme will touch on these points. In terms of working from home, I have to say, I definitely miss, and you know me well, Gaurav, I definitely miss the meeting with people and working side by side. I mean, this is I mean, at least for me, has been an issue. But at the same time, using the technology that is available now, it's really possible to have very strong working experiences. You know, sharing live documents being like exactly you were in a client meeting or in a room. So again, I would say, you definitely, this cannot be sustained forever, as you all know. But there's definitely a lot of things that we can learn and we can apply also in the hopefully fully back to normal world in the next few weeks and months.
Thank you, Alberto. Touching on the right transition topic for technology, Jérôme, perhaps you are right. With your background and tech focus, how do you see companies performing on digital transformation? And what do you think are the trends and like winners and losers in this current market? And is tech the future?
Yes, thank you, Gaurav. I think that, this crisis is just going to accelerate something which was already in the market. I mean, digitization has become a must. And there are plenty of new use cases which are popping up. And there were some resistances before the crisis, and these resistances, I mean, have evaporated just because there is no choice. I mean, social distancing and so on and so forth. I mean, there is just no way. If you want to have some kind of business continuity, you have to go digital. And so you can see organizations which actually were ready, and some others organizations which were less ready. And so the difference is already behind us. I would make probably also a distinction between the various practices. I mean, my observation, first of all, about the healthcare practice, which was really at the front of the crisis. And
Jérôme? I think we have lost Jérôme. Perhaps it's hang up. Anyways, yeah, okay, we'll touch back the topic again once he joins back. So anyways, we can cover the tech topic perhaps on the end side. So moving on, Sebastien, what is an impact of COVID made on the law firms? How would you say? How would you see the impact on your clients and your firms?
There have been several impacts, and I'm sure Paul will be able to jump on that also. Some positive impact for certain of our team, in particular financing, litigation, employment of course, restructuring teams, because they have been very busy, and they will become busier and busier during the next few weeks and months. Maybe plain vanilla private equity or M&A transaction, and a little more distressed M&A or private equity transaction. Less secondary PE transaction and more primary private equity transaction. So it's the first feedback I can give you on the business issue. Regarding management, there have been a huge impact for us, because it have been a very positive impact on the management and cross-selling between a practice and offices through the world. More interaction maybe between our offices in Europe and in the US, and also more cross-selling and business development between the practice, even here in Paris, with information sharing, collective pitches. Very positive impact on the digitalization, because now, in particular in France, we are practicing the digital closing, which was not maybe the case even few months ago. I think Paul could confirm. So it's less paper and less waste of time. So it's very good. And there would be for us, I think, some very good opportunity, because some new matter will appear, and also maybe there would be some opportunity maybe to us new team and practice in the nearest future in our office.
Thank you, Sebastien. So definitely it provides a clear view on that the business has uptaken because of there's a lot of cross-selling and there's more demand coming from the legal side for the corporates, and from all different types of clients. Moving on. So Jérôme, thanks for coming back. We lost you, so we'll be glad to hear your views on technology and digitalizations for the corporates. You're on mute, Jérôme.
Yeah, okay, that's okay. I'm back. No, I just wanted maybe to make an observation about the various practices. So starting with the healthcare practice, which was extremely busy during the crisis and even day one. I mean, we allocated a lot of resources to help the health systems around the world, to help hospitals, big hospitals, with organization issues and crisis management. We also helped the WHO. And what happened very quickly is two things. So first of all, I mean, we needed to have models for the epidemic, and this is really about big data, about artificial intelligence, and so the gamma teams, so the data scientists within BCG were very busy very early on, and they provided technology to help the health systems manage the crisis on a fundamental basis. Then we realized that many systems were actually not digital. I mean, just take the example of remote consultation. This was something which was not possible in many countries for regulatory reasons, for bad reasons overall, because I mean it's feasible, it's not complex, and the crisis really unleashed these possibilities, and now everywhere in the world, we just realized that there are so many things that we can do remotely, that data management should reach the next level of sophistication, and that, I mean, the crisis management would have been even better should the healthcare systems be more digital. So I hope that if there is a next wave, as Celine was mentioning, I mean, these systems are going to be more ready to deal with these issues. So that was for healthcare. For all the other practices, it was a little bit slower, but even if it is slower, it's very fast, because I mean, immediate response was organization, of course. I mean, and how do you organize work with social distancing, and how do you make sure that people can go back to work in safe conditions? So this was a big part of the job of the teams during April and May. And here again, I mean, digitization, I mean, is really making the difference between the winners and the losers in a given industry. Just if I take the example of banks, I mean, commercial banks, we've observed, for example, that some of the banks were really capable to offer business continuity, and some others were, I mean, striving with the problems. And this is going to materialize, I believe, in the end of year figures in many industries, and in all industries. I mean, what's accelerating, I mean, after the lockdown, I mean, two things. So first of all, I must admit, restructuring. It's no good news for many people, but I mean, this is the way it is. So many industries are restructuring. I mean, you've seen the latest communication of Airbus and the airlines, the transportation. I mean, there are many sectors, tourism, which will have to face a restructuring. And for all the others, I mean, it's a mix between reorganization. I mean, the social contract will not be the same after the crisis, and digitization, and both are intertwined, just because, I mean, work from home, using digital tools creates a series of problems which were not necessarily anticipated, ranging from cybersecurity to efficiency to measurement of performance in a case where you work from home. And so this is really changing things, and digital tools and are going to make a huge difference, starting with the infrastructures, which hopefully resisted very well during the crisis, because as you as you've observed, it was possible in many industries, in many situations, to work from home, and this was not a given. This was really due to the quality of the infrastructures, at least in Europe and in the US. So this was, in a nutshell, what I could tell about what the crisis has changed and is going to change.
Thank you, Jérôme. At least provides us like three different topics of restructuring, healthcare, and of course, digitalization. Perhaps a question to you both, you and Celine. How do you see the M&A or the activity in healthcare sector going forward, like once the COVID-19 subsides, and supposing there is no second wave or third wave? And second, which is an important topic also, Jérôme, which you just touched upon, and Celine, perhaps for you, is who will be the winners and losers once this COVID-19 subsides?
Well, I'm happy to try to get an answer to the first question. I think as Alberto and Jérôme said, healthcare is going to remain an area of focus for investors. I think this crisis has demonstrated the need to inject more capital in these essential infrastructures, particularly hospitals, but also labs, given the prominent role they play in testing the populations. So I think it's good news for the whole healthcare services industry. I think governments are going to provide more support, provide more resources, and the private and public sectors hopefully will work hand in hand together. We've seen remarkable behaviors actually during this crisis. I was yesterday with the CEO of a labs business, and he clearly mentioned that the cooperation between public and private had been great. He also mentioned that some of his employees had worked unpaid hours to make sure they were testing and helping the populations. So I think that's going to remain a big area of focus for investors. I think we're going to see also a disruption of the supply chain. I think there's been an awareness that a lot of our medications and drugs are produced overseas, particularly in Asia. I can see a scenario where we are going to re-internalize in our own country the manufacturing of these drugs, just to make sure that in case of pandemic, we're more reactive. I think the same will apply to medical basic equipment, and question mark obviously on nursing homes. It's clear that nursing homes have been very impacted by the crisis. So I think investors might be a little more cautious. They will probably wait for a pause in the pandemic before M&A can resume in this subsector. But overall, I see this sector as very bright, attracting more capital, and hopefully that will be beneficial for all of us citizens going forward. I can comment on winners and losers, but others might have a perspective on healthcare before we move topics. Jérôme, you're on mute.
Yeah. No word about healthcare. I believe that, again, the digitization was there before the crisis, but for many reasons, again, it was not as fast as it could have been. And so I see a big acceleration. And just to have orders of magnitude in mind, just to talk about the French system, we are spending 270 billion euros every year in healthcare. And some of the things worked during the crisis, but not all of them. And so the question now is, how do you make sure that this spending is efficient? And what the hypothesis that you can make is that putting the data at the right place for the decision makers and optimizing the way this is spent is just huge. It's a huge opportunity. I mean, the productivity increase that you can make in efficiency and in more quality of service. I mean, we're at 20-30%. Just with the existing technologies, just by populating them, spreading them, and making sure that they are available for everyone. So I was talking about remote consultation. This is only one thing. I mean, there are so many things that you can do remotely. I mean, with IoT, with testing, diagnosis, prevention, and all of this is about digital. And so, I mean, the winners are the ones who are going to have the maximum leverage to make sure that not only we spend more to be ready, but we spend in a much better way. And so I believe that all businesses are going to be digitized, and each step of the value chain is currently being digitized. I mean, if you just think about R&D, I mean, development of a new drug or development of new vaccine. I mean, if you have the right digital technologies, I mean, you just go faster. I mean, clinical trials, when they're dematerialized, can be much faster. And so this is a race to get a vaccine, and every month that you can save is a month is an excellent month, and most of the time which is lost in the development of a drug is a time where you can have an impact if you have the right technology. And so, of course, you will not develop a vaccine in a matter of months. I mean, we are still talking about years, but hopefully this time it's not going to be 5 years. It's going to be much less. And the reason why it is less is because of all the players, all the technologies who are automating the clinical trial processes, which is very lengthy, very complex, very regulated. And so this makes the type of winners that you can imagine. So no one will win without the technologies, and the ones who are going to master the technology will accumulate, I mean, more resources and become very expensive targets for sure. And there will be money, of course. There will be a lot of cash and liquidity to make that type of acquisition. So, as we've seen, the Nasdaq, which is above its pre-COVID level, I believe that e-health and biotechnology is going to follow the same path, and there will be an acceleration. And so there will be big winners and big losers. So the spread is going to be bigger.
Thank you, Jérôme.
I would add maybe, Gaurav, to the winning sectors, a few other industries. I mean, and it mirrors exactly how we have behaved during the containment period. So there's a lot of demand right now, obviously, for essential infrastructures beyond the medical infrastructure we just discussed. Telecom infrastructure becomes very high on the list, be it set-top boxes, fiber, as well as any IT, essential IT equipment. You know, we are all in need of more capacity to work from home, more video, more Zoom. So obviously the technology needs to work, and I think that's reshaping the way we interact and the way we're going to also travel and work going forward. So we see a lot of attention on this sector. We see also a lot of attention on the food, agro, and ingredient industry, because I think what is there to stay, and I'm conscious we have a very young audience, what is there to stay is sustainability, you know, how to get more healthy, how to eat more, better foods, how to use better ingredients. I don't think this COVID-19 crisis is going to change the focus of the younger generation on better behaviors and better food patterns. So I think the overall food sector and food distribution sector is going to behave very positively. And then I would add to the list given by Jérôme the use of data, data management. I think given what happened over the last 3 months, people have been in need of analyzing data, and that applies to the medical sector. Telemedicine has been obviously seen a great development. It's going to impact cybersecurity. People want to know what people use, what people consume, want feedback. So I think anything related to big data and how to read big data is going to be a very hot sector as well. And last but not least, I think we've all had to give school from home. So education, I think, is going to go through an absolute disruption. We were involved in the sale of a company called Galileo just before COVID-19. The business literally migrated entirely digital within a matter of a few weeks without any problems with their systems. So I can see a scenario as well where our kids are going to be able to be educated much more through digital platforms than by sitting in a classroom going forward. Not everything will be digitalized, obviously, and I think real humans will remain very important going forward. At least I hope so. But there are subsectors that are going to go through a massive disruption. These are, I think, for me, the winners going forward.
Thank you, Celine. It provides us a good view of what winners and losers could be in the next 24 to at least 36 months as the technology evolves. Thanks. We have 2 good topics to touch before we start taking questions from the audience. One is definitely financing transactions, and that I will address to Paul. How do you see, Paul, the financing markets responding, and what kind of transactions do you see currently in the market?
Well, the terms wave is probably quite popular at the moment, but in the financing market, we're in the 3rd wave already. The first wave was really all the waivers and basically people sort of having to handle emergency and crisis. So that was for the first couple of months. We had a 2nd wave. We started pretty much immediately, which was emergency financing. All the prêts garantis par l'État in France and the similar scheme that we've seen in other countries. I think this one, in France, we've committed a 1/3 of the budget that was allowed. So there's 100 billion committed, but there are another 200 committed by the state. At the moment, we see a slowdown because everyone needed it, sort of taking it. But we expect that come September, there will be additional people requiring that kind of emergency financing. So at the moment, this wave is slowing down, but there will be a rebound on that. That's the expectation. This has been from fairly simple in some cases where the banks were just extending the money on the basis that the condition were met, to fairly complex ones. I mean, we've worked, for instance, on the financing for Air France, which clearly was slightly more complex than your usual PGE. So that remains to be seen when it comes back and in which proportion. And then we have the 3rd wave being sort of back to normal in a sense. So we're now working, as Celine described earlier, and I think Sebastien touched on it as well, sort of new deals, which were not deals from the pre-COVID era. We had that at the beginning of lockdown, where we had some deals which were in process and reached closing. But no, we're talking about entirely new transaction, and that's basically a busy July. So even more busy than usual, which is a good sign, I guess. Obviously, not everything is eligible for doing a good deal at the moment. So healthcare, clearly, everything that's digital. These are the ones which we see mainly, but there are other sectors. Some of them more surprising than others. And that's the good news. The sort of flip side of it, that we have not seeing yet is probably the restructuring side, which you all touched on. The expectation probably is that the hard bit will start when people will report on their accounts on the 30th of June, because the accounts on the 31st of March were not heavily impacted by COVID yet. But this quarter is going to be the quarter that, makes or kills the businesses. So the reporting will start to come in September roughly, and that's when the nasty bits will start to kick in, I guess. So that's really what we're seeing in terms of the financing activity.
Thank you very much, Paul. Clearly defines the financing market in two aspects. One is, of course, what's going on in the market right now and what kind of transactions you're seeing. And then, as you said, for the restructuring, which is not yet being touched because of course, the quarterly reportings and how it moves forward. Okay. Thank you. It's a very important topic for all of our audience, or most of our audience, is recruitment and employment. So it'll be great to see how each of the individual institutions have changed their policies or not changed their policies. So perhaps we can start with, Alberto, do you want to say something about how it has impacted on Kearney?
So I think is probably, I would say, second quarter of the year was difficult for us in terms of hiring. So what we have done is we kept the senior hires and the strategic hires going, but for the student hires we have postponed the entry towards the back of the year or beginning of 2021. So we maintained the offers, but we moved them forward. So I think this is a trend that I've seen across multiple companies where they want to maintain the commitment that they have undertaken, but at the same time they are trying to postpone the process. I don't know if Celine or Jérôme, you have seen similar approaches as well.
Well, at Goldman, we've managed actually to intake the same number of people we were planning during the COVID period. They just arrived slightly later than expected in our office. That obviously what happened begs the question on how do you make sure that the young analysts or trainees that are joining our companies get integrated when only like 20 or 40% of the people are in the office. I guess if I were to start my career today, I would find it challenging to be integrated only digitally without seeing the right people, without seeing the actions. So we are wrestling with that question on how we can give the same quality of experience to the younger bankers while negotiating how we're going to accommodate work from home going forward. I don't want to front run what our leadership will decide, because honestly we're debating it as we speak. But I think we are going to project ourselves in a world where there will be more flexibility around work from home, which means we'll have to spend even more time with our younger talents to make sure that their experience is the same as it was for our generation, which will not necessarily be that straightforward. So no change on our side, no change for the moment of policy on recruiting. We're trying to maintain exactly the same as we had decided pre-COVID.
Thank you, Celine. Sebastien, do you want to say something about Paul Hastings and recruitment?
Yeah, of course. So as Celine would say that there was no particular impact over recruitment principle here in Paris for Paul Hastings. We even host some new teams or on lawyers remotely during the last April and May, because we are recruiting a big restructuring team led by Guillaume Raymond. For the next weeks and months, it's sure that we'll mostly recruit some people for the booming practice. Of course, it could be restructuring, finance, litigation, white collar, and employment. Maybe for corporate, it would be a bit different. and also maybe the new thing we will propose to our associate would be maybe to work a little part of their time work remotely from home. It was not the case before, so I think we will maybe let our associate work more in a more flexible way we can do before.
Thank you, Sebastien. Jérôme, perhaps you want to give some views on BCG?
Yeah, same thing for BCG. We will also go probably more digital. So, there are 3 entities which are going to be very hot. I talked about it. Data scientist with Gamma, digital ventures, because again, because of everything we said, and architects, specialists of the networks and infrastructure. These type of profiles are going to be in high demand for the next months. So the crisis has not changed anything, but it has not changed anything negatively, but not positively. Meaning that without the crisis, we would have probably expected more growth, and doing the budgets for the next year, we would probably have been more bullish. And let's face it, one way or another, we have lost 1 year of growth, and this will reflect on the recruiting policies, except for the talents which I just described, which are very specific and in high demand.
Thank you, Jérôme. Paul?
Yeah, well, a bit the same as my colleagues. We had a bit of a pause in March, I guess, but we've resumed recruiting at a normal pace, and as a matter of fact, as Sebastien described, we had some teams joining in lockdown, which was a bit tough for them, but they're well integrated now. And we're recruiting trainees and young associates. And we had plans to recruit people, and we basically increased the number of people that we want to recruit, just because financing and restructuring will require more people in the coming months. So we need new talent.
Thank you, Paul.
If I can add, I think similar to what my colleague.
For sure, something which is going to change for everyone is much less travel than before the crisis. So even for the trainings, which is a pity, but client work is going to be much more remote, and for a long time. One of the surprises, even for me, of the crisis was that it worked. And actually, you could, once you know your clients, you can work with client teams. Really, it's relatively seamless, and people, actually save a lot of time of transportation. And so we will probably see much less travel in the near future.
Thanks. Alberto, you were saying something?
No, I was just saying that I think this was, I would say, a good opportunity. Clearly forced by this situation to a lot of corporates to really rethink their business model, and really reconsider also where talent is required for the future months and years. So I would suggest that the audience here really definitely consider that in their next steps when applying for the job, applying for a career, because this is definitely a moment of opportunities as well.
Thank you, Alberto. So now, let's move on to the Q&A from the audience. So with the first question coming from Paul, PPE, Oxford. During the pandemic, we have seen large inflows into ESG funds. Why? Is it because people's social conscience has been awakened, or because ESG is better insulated against downturns? So perhaps a question for Alberto or Jérôme or Celine.
I can start on it. I mean, I think it's actually a combination of both. For sure, there's been a social awakening around certain teams. So this is definitely one of the priority areas for the next few years. At the same time, also thinking with their financial hat on. I mean, people are also considering these as better areas for investment, which again it's good in itself because it really helps the society overall. So I would say combination of both.
Yeah, I totally agree with that. I think, as I said earlier, the sustainability trends are there to stay. There was a fear that, with recession, we would go backwards to the old bad habits, and it's actually not the case. So I think companies that have, stated their sustainability objectives, whether this is a B Corp rating or you've seen Danone announcing, their change in legal structure to become a company with purpose during the COVID period. These businesses, these leaders are paving the way on sustainability, and I think it's a structural move. So hopefully, this will accelerate.
Thank you, Celine. Thank you, Alberto. Next question we have is from Kim, Corporate Finance and Strategy, IACG Paris. How do you think valuation methods will be affected by COVID-19 crisis in IBD and PE?
I guess that question is probably for me as well.
Probably, yes.
So the big debate we have in M&A right now is which reference EBITDA, which reference PE multiple do you take into account? Is it the 2019 undisturbed multiple? Is it the year-to-date June 30th, which is obviously very impacted by a very bad Q2, or is it the reforecasted 2020? Or 2021 post-COVID. And I would say that right now for quality companies, what's happening is private equity funds and investors are seeing through COVID if they can, and maintaining therefore the same valuation as they were ready to pay prior to the crisis, provided that the seller can demonstrate that the current trading is back on track. So if you're talking about a company that had a 20% growth rate pre-COVID, that had zero EBITDA during Q2, but can demonstrate in May, in June, that the 20% is back, or even a better rate than 20% because consumption is catching up after 2 or 3 months of quiet period, I think you can hope to sell this business for similar multiples that you had pre-COVID. So the devil is in the demonstration of the rebound in terms of current trading of the underlying business. It's also the devil is also in the scrutiny of how you're going to project the cost structure of the underlying business going forward. So if you're in an industry where you need more employees, for example, to clean the offices, if you are going to incur more costs to maintain good sanitary conditions, I think the buyers will need to see that in your cost structure, you've made these assumptions for extra costs, and they will need to understand where the corresponding savings will come from. So that would be my answer to the question. Obviously, it's very dependent industry by industry. I think what I just described is, scenario for companies that have resisted well and therefore are in a position to be sold or acquired.
But if I can add, I would say we still see a lot of, mismatch between what sell side and buy side valuations are. So it's not easy to find the right compromise, and maybe only for exceptional asset at the moment is able to to solve these potential issues. Hopefully in future things will migrate towards a more consensus around those two sides of the evaluation.
I think that will beg the question, and Sebastien and Paul might want to comment on how are we going to document M&A transaction going forward. I think because of this bid-ask disconnect, there will be a need to potentially enter into sell and purchase agreements that will be more structured than what we saw historically, meaning, for example, that the sellers will keep a stake in the business to benefit from the recovery, or will finance the buyer to make sure they have the right appropriate leverage through vendor loan to compensate for lower leverageability or lower EBITDA temporarily. Or earnouts clauses that we were not seeing anymore pre-COVID. Earnout is a good way to make sure the seller is not leaving any money on the table and is incentivized for the rebound or the upside that will materialize after the transaction. But Paul and Sebastien, you might have additional considerations on this.
Yeah, Celine, I totally agree with you. There will be some huge impact on the price structuring under the SPA. We'll see if we will still be in a lockbox mechanism, or there will be some adjustment at closing for the net debt or for the working capital. So I think it would be the question for now or for the next following days and weeks. There would be, of course, some earn-out mechanism in order to find a medium way between the buyer and the seller regarding the amount of the purchase price. And also there would be some new maybe some new CPs with respect to any material adverse clauses linked to a pandemic, which becomes which recently appear in the first draft SPA we can review, and even some more maybe stronger undertakings for the signing clothing period for the seller.
Yeah, and I would just the point that you made on the vendor loan. I think I've seen at least 2 transactions over the past months where, to adjust the pricing and given the lack of financing at a certain level, essentially it's the vendor who made up the mezzanine by putting in place a vendor loan that was only repayable at a certain level. So it's another layer of debt which enables the vendor and the buyer to sort of reach a common ground.
Thank you all. Next question is coming from Sam, lawyer at Skadden Arps. It's a very interesting question. Is it possible to do an M&A deal without having ever met the management team in person, assuming no previous goodwill meetings pre-COVID?
It's a good question. We have been asked this question a lot. Well, I've done management presentations through Zooms, but I can't claim we've had, at least I've not had any transactions where the buyer and the seller have not met physically yet. And I personally think it's challenging, frankly, because if you put yourself in the buyer's shoes before writing a big check, you want to get a feel for the managers and not only the CEO, but the way the CEO interacts with the rest of the management team as well. All these soft factors are super important before you commit. So if I had to vote, I would say that it's feasible technically, but I don't think it's something that financial sponsors or investors will like.
To jump on what Celine say, totally agree. Of course, what we have done recently, we have digitally closed some transaction, but pre-COVID period, people made. We had some deal which started during the COVID period, but think then people met and had several meetings in person. I think well, when you are talking about M&A from the M&A side or from the lawyer side, it's humans activity. So people need to meet, to sit over the table. Of course, they can, when they know very well each other, they can work remotely. But it's clear that one time they would have to meet and to take the time to know a little bit better than the other person.
Thank you. Another question coming from Jordan Law, Oxford. Jérôme mentioned the NASDAQ is currently higher than it was pre-crisis. Does the panel think this is a well-grounded valuation of the market or a sign of overconfidence?
It's the $1 million question, huh? Or answer.
Yeah, I think my answer to this would be we're going to soon find out, because you know, a lot of the managers and leaders I interact with ask themselves the same question. They feel a pretty ugly disconnect between the real economy, the real life, you know, what they have to do in their companies, and markets that seem over optimistic in light of the recession I described at the beginning of this webcast. And you know, the rise of unemployment both in the US and in every geography that has been hit by COVID. So and it's true to say that we feel, you know, the pandemic is behind in Europe, but when you look at the statistics in the US, in Brazil, in Latin America, and in some emerging countries, you know, they're still at the middle of the pandemic, and with no signs of improvement in the number of cases. So I think we remain in an incredibly volatile environment. I personally fear the market's reaction post the Q2 results. You know, we might be in a scenario where investors have already seen through it and taken a view of 2020's recession and the rebound. But you know, there's no certainty around the current sanitary situation. So I think you know, this question is very, very topical, and there's no perfect answer to it.
Thank you, Celine. Moving on to the next question, we have Dan, Economics and Management, Oxford. What does the panel anticipate will be the main silver linings from the current crisis within their respective firms and beyond? Perhaps Paul or Jérôme or Alberto, you would like to start on?
I can start. I mean, I think, so as I said before, this has been an opportunity for every single business in the world to really reconsider their business model and think about how they are going to operate, well, during this crisis, but clearly also after the crisis under different scenarios, and these will lead to very different choices, I think, in terms of technology, in terms of people, in terms of strategy. So I would say, as we said before, also company by company, sector by sector, there is going to be a lot of activity following this crisis, and who is going to, you know, think in a better way around these teams is going to then come out more strongly in the next few months and years.
Yeah, I don't want to be controversial, but I mean, coming from a macroeconomic perspective, I mean, what could be a positive effect of this crisis is the positive reaction of Europe. I mean, contrary to what happened in 2008, where the reaction was extremely slow and probably not the right order of magnitude, now we seem to see a form of coordination, cooperation between France, Germany, and the rest of the EU. This consists in injecting a lot of liquidity first, but then in reinvesting in the new priorities, which is healthcare systems, which is technology, and sustainability. So we are talking about trillions of euros which are going to be invested, and probably this is a huge opportunity for Europe to catch up against China and the US. Obviously, I mean, the reaction of the UK will be another issue.
Yeah.
Sorry, go ahead.
Sorry, no, I think there are a few lines which have been a bit commoditized before the crisis, and that may range from the healthcare system in a way, at least in France, but in other jurisdictions, or even IT in some places where people tended to sort of buy what was available without doing too much due diligence or the quality of their credit agreement. And I think that, you know, having tested all these lines of equipment or of service, people will have a better sense of, you know, what's worth to invest in. And I guess it primarily shows with healthcare and the and IT systems, but it also probably also applies to a lot of other things, from, as I said, running from credit agreement to making sure your bikes is in working order.
Yeah, what I was about to add is I think what this crisis has brought is also maybe an increased awareness of the work-life balance. You know, I've heard people saying, you know, I never had dinner with my children, and for 3 months I managed to, you know, regroup my family, and actually it was nice because we, you know, we managed to spend more quality time together. So one of the silver linings of this crisis could be that, you know, people actually, you know, reconsider their work-life balance. Doesn't necessarily mean they will be less effective at work, but you know, we've all taken flights that we didn't need to take. We've all been through meetings that were useless. You know, if one good thing comes out of this crisis, it will be probably, you know, better family balance, better life balance. But that maybe I'm a bored optimist.
Yeah, very happy, Celine.
It's a good point. I mean, I think on the flip side, there is I think more and more or less blurring between I think work life and personal life. So there is also that effect that will need to be taken into consideration, especially for the new generations. So, you know, hopefully let's hope we get your positive view out of this. Yeah.
Thank you very much. Very interesting topic, of course. Moving on to the next ones, we have Max, graduate from Imperial. How can new joiners in consulting prepare for their role and succeed in their early career during a time when there's a slump in demand for consulting projects? So I'll let Alberto and Jérôme to answer that.
Yeah, slump in demand, I mean, is not quite sure. I mean, and this is rather the opposite. I mean, even during the crisis, I mean, figures, first half figures are pretty positive. I mean, and so there is still some growth, not as much as we would have hoped, but there is no recession in this industry, and so to be ready, I believe that you need to be topical and to make sure that you join the right practices with the right product, and the right set of skills. I mean, all digital skills will be very easy to staff, no doubt. So, I mean, if you're a good data scientist, or if you have good views about how to upgrade systems, to upgrade organizations, I mean, if you are familiar with agile at scale, and so on and so forth, I mean, there is just no doubt you will have very high demand. Then there are sectors, as we said, which are more favorable than others. I mean, in healthcare, I don't think that there is a slump in demand. In aerospace and defense, it might be a different story. Of course, on transportation, it's going to be another story. And yes, but coming back to restructuring, I mean, restructuring is also some specific skills. So I would say that you need to de-average your positioning. and to make sure that you fit the segments which are going to face high growth, recognizing that some other segments will probably be less attractive in the future. So yeah, so specialization is a good thing, but increases, of course, your risks, and so you need to find the right balance. But being the pure traditional generalist consultant is probably something which is going to be, I mean, less successful in the future.
Thank you, Jérôme. Just keeping very of the time, so we're going to take 5 more questions, and then we can wrap this up. So the next question comes from Zaid Economics in LSE. Will the substantial amount of dry powder that the private equity industry has led to greater levels of buyouts and acquisitions, despite the gloomy economic climate?
I think the answer is clearly yes. I mean, as I mentioned earlier, I think financial sponsors are clearly not going to make the same mistake as in 2008 and pause for 2 or 3 years before they resume investments. But I would say as well that the private equity community is very bifurcated at the moment. I can see half of my clients being very focused on their portfolios. As Paul said, those state-owned loans have helped the liquidity crisis, but it's also adding debt to existing debt. So there might be a wave of re-equitization of some of the companies that will have suffered the most. And for private equity funds that are exposed to the sensitive sectors, I think the priority is obviously to mend the capital structure of these businesses rather than to deploy more money. For people who had just raised a fund or had a lot of dry powder or have healthy portfolios, the situation is very different. There's a world of new opportunities out there created by the COVID, but also by the recession that will follow. And this part of the community is very keen to put money at work in a very aggressive and preemptive way. So I can give you examples. KKR deployed over the last 3 months more than $12 billion in various investment strategies, probably around 2 or 3 in private equity alone. So that's just to give you a sense for how active some of the players in the private equity are at the moment. So I think all the dry powder that was raised pre-COVID, which had reached a peak that had never been reached before, it's about $750 to $800 billion were there to be invested 1st of March 2020. I think this dry powder is going to be deployed very quickly during this pandemic and after.
Yeah, and there may be a little bit more of polarization probably in terms of who are going to be the ones that are going to deploy more and invest more, and maybe they will be the one that have the broader portfolio that can weather in a better way the crisis.
Thank you, Celine. Thank you, Alberto. Just follow up on that part from my side, Celine. So what do you see the view of the current vintage of the assets? Will there be a much more longer period for the PEs?
So I think, the private equity community has actually, independent of COVID, has shifted in its nature dramatically over the last 5 to 10 years since the big crisis. We have seen the emergence of longer term funds well before the pandemic. So with people able to invest up to 10 or 15 years, able to agree to very long lockups in companies. We've seen people able to invest in a minority way in public and private businesses. I think the mandate of private equity has just amazingly diversified over the last 10 years to address more or less all the needs for different equity, in terms of size, in terms of governance, in terms of length. So when I look at who we were covering 10 years ago and who we cover today, we've added to our platform pension funds, insurers, family offices that are a great source of long-term reliable capital, as well as sovereign wealth funds, ventures, and real estate and infra. So I've seen over the last 10 years an amazing convergence of all these various pockets to the private equity world, simply by virtue of the fact that there's very limited yield in the current environment because the interest rates are at zero or even negative. So the private equity and infra sector remains more or less one of the last asset class able to generate returns higher than 10%. I'm pretty optimistic around the prospect of this industry. I think we'll continue to see an inflow of capital rather than the opposite.
Thank you, Celine. Moving on to the next final three questions. So we have from Liv, Geography, Oxford. With fewer opportunities to get hands-on experience at the moment, what does the panel advise students to do to navigate the recruiting landscape and ensure they stand out? Paul, perhaps you want to start with it and open the discussion?
Yeah, no, sure. I think you essentially have, well, the first thing I'd advise is make sure what kind of experience you want to make. Try and think about it. Think about where and why. Once you've sort of identified the sector and possibly the firm or the place where you want to apply, try and reach out directly to the people, because if you're not fishing blindly, but if you're sort of if you're having a clear goal and opportunity, you'll have a better reception, and you will make opportunity for yourself. I think the key thing is not to spread out too thinly, but to be focused on what you want to achieve and where you want to achieve. If you know why what you want to achieve, you'll be much more convincing. So you have a much better chance of finding an experience. And even if you don't find an experience with the person you've reached out to, if you've got something to say, that person may actually come back with a suggestion or something which you may not have thought about, and which could help you. So that would be my piece of advice.
One of my usual recommendations, and which is especially true in these days, is think like an investor. So think of healthy companies, healthy sectors, and sectors which are going to win out of the crisis. So sectors with good gross margins, and preferably the leader in each industry. And I believe that, you're going to invest the next years of your life in a company, and this is a good way of thinking of it. And so be less passionate, be more a cold fish as an investor.
Yeah, I would add, this is, as we said before, is an extraordinary moment, and there is so many also opportunities, for example, in the venture capital space with new startups, etc. So again, if you cannot land the job of your dreams in the next 3 months, I suggest try some of these opportunities, again, thinking about what you really want to do and what is probably going to be some healthy areas to invest for your career, and try to have some of these experiences, because these will be definitely very valuable whenever you then land the kind of longer term job that you're looking for.
Yeah, what I would also maybe add is, this generation has an amazing advantage over people of our age, which is that, there's so much information available, on the net. So my first advice would be, document yourself before going to an interview. Google the person that you're going to see if you have the names in advance. And then during the interviews, what we value a lot, or what I value a lot, is self-confidence and people who are genuine. I don't expect to interview experts, but I do expect to interview people that are going to respond to my questions in a truthful fashion. So you wouldn't imagine the number of people we interview that make up answers when they don't know. Well, that is usually not a very good way forward. Voicing motivation, and getting properly documented, but also being yourselves in a self-confident way, I think is the winning combination.
Thank you very much for this detailed answer. Moving on to the final three. So Sheikh from ESCP Business School, how do you see monetary policy playing out over the next 5 or 10 years, given that central banks have massively expanded their balance sheets?
It's a good question. I would make one observation, which is not totally mainstream, but I mean, when we are talking about ratio of public indebtedness, I think that we don't take the right denominator. Denominator should not be the wealth created each year. The denominator should be the wealth of a nation as a whole. And if you take the example of France, there are 12 trillion private wealth, and so we are talking about indebtedness of 2 to 3 trillion max. And so at some point, this is the justification why the rates are so low, just because people take no risk. So yes, it's fascinating to see that balance sheets central banks' balance sheets are expanding, but the reality is that there is a stock of private wealth, which is I mean 6 times GDP in France, and in the UK this is the same, versus a debt ratio which was 100% and it is going to move to 120% and maybe 150%. So in my view, there is still a lot of room for maneuver. And we've seen it in many countries, but probably there are better specialists, in particular at Goldman.
My suggestion, Gaurav, because I don't claim to be a monetary expert, is that you organize another webcast sponsored by StayTouch on this topic.
Absolutely. Thank you, Celine. We are actually planning that one. And also one is coming very soon is on diversity. And the third one, which includes some really known art performers from Bolshoi, Mariinsky, and other famous institutions, impact of COVID on art and culture. That one. So the 3 important ones are coming very soon. Okay, well, staying on the topic, sorry for that. The next question comes from Jan, HSPS, Cambridge. Given the seemingly insuppressible rise of anti-European sentiment in Italy, are companies starting to factor in the possibility of further EU disintegration into their models?
Personally, I'm not aware
to answer that.
Or the other guys.
I mean, I'm not sure that there is an insuppressible rise of anti-European sentiment in Italy, being Italian, to be honest. But jokes apart, I mean, I think everybody still, I mean, as I think some of you mentioned earlier, Europe has really demonstrated something interesting and something positive in managing and addressing this pandemic. And clearly, if you compare it with some other countries and regions, you can see the difference. So hopefully there is a chance to build on this and have a stronger Europe related to this. And I think at the moment everybody is assuming that that's the case, at least at my clients. Yeah.
I agree with that. I don't think this is priced in, and I want to see the positive side. With the cooperation between, for example, Germany and France on sanitary solidarity during the crisis. And one question we are asked a lot is slightly different: is will Europe outperform, Asia and the US? Both in terms of sanitary statistics, but also of economy going forward in the rebound. And I guess so far the statistics are actually pretty encouraging in terms of Europe, rebounding quite strongly.
Thank you, Alberto. Thank you, Celine. final question. So we have from Aaron, MBA in Stanford. What do you all recommend we should be following, keeping an eye on, doing to improve our employability, commercial awareness, knowledge, and skills right now?
Be digital savvy.
Okay. Anybody else from the panel who wants to give a view on this?
I think I mentioned this before, what to do in my mind in terms of really looking at the startup and the venture capital area as well, because there is a lot to learn in this particular time. And again, this is something that you could potentially do while you are either finishing your studying or preparing for the big job opportunity.
As Celine said, I think it's really important to keep motivation, and also to still be very positive for the future, because it's always better to interview people motivated, positive, and pushy. So I think this is one of the key of the success.
Yeah, and develop your own style. I mean, there's sort of this preconceived idea that we are recruiting people with a certain suit, a certain personality. It's quite the opposite, actually. We're trying to recruit people who are, are their own self and are not shy of defending their opinions, including in interviews. So I'm personally more interested in meeting personalities wherever they are than stereotypes.
Absolutely. Thank you. I'll just add to that point from my own personal standpoint on doing finance and a bit of now the tech entrepreneur. I think what you can do is always just follow your passion, and developing skills comes following through your passion. So develop that thing, and at the end of the day, employer, whether it's any finance institution or a startup, will actually want to know you more as a person, as a cultural fit, as a person with whom you can really form that relationship and trust. That's where I think thing lies. So more forming that personal skills. Okay, well that ends our Q&A, and I would like to thank all our panelists for sharing your time and insights with us in what we have seen a very informative and fascinating session. It's been a real pleasure to have all of you join us. We'll be hosting, as I briefly mentioned, a few of the webinars very soon. And thank you all to everyone watching, and also for your questions. We look forward to welcoming you all again soon at our upcoming events. Thank you.
Thank you, Gaurav.
Thank you. Bye-bye, everyone. Bye-bye.